The Magnificent Seven, let's take a look at them for my first time in 2026. That's right, I'm going to pull up the charts of each of these 7 tech stocks and just reflect on them with the annotations that were there before Christmas and update live in front of your eyes. So if you're new here, I'm Hima Reddy. I use price action, market timing, and momentum to boost my trading and that of our tribe. So let's dive in. So I'm just going to go in order of the company name. Okay, so Alphabet, so ticker GOOGL. Here we go. All right. So without referring back to my past videos or commentary, from the way the analysis is laid out, I can see that I had annotated consolidation and we have broken out above the resistance from that December 16th high. So I can remove this line from my chart, okay? Now the support that was in place December 17th is still important, but it's not the most important to the short-term action. So I'm going to take this bottom level down here from November 14th and bring it up to the most important short-term low, which is now January 6th. See how now that we started to break higher, right? We have been trading above the November 25th high. We have to consider new short-term support levels. So that's a pro tip for you when you are adjusting your charts after a break. Like I literally have not pulled up this chart in 2 weeks. You want to make sure that you are adjusting systematically. Now, the other thing I see here is that we have this massive important low December 17th. So I want to figure out what's the middle of that bar. Now, for me, the middle, the 50% retracement, is extremely useful across all kinds of applications. So I just want to point out that whatever you are looking at, whether it's a single day, a range of days, an advance, a decline, it always helps to know what would be the middle of that because it can be important support. So in this case, I'm going to take this other support and move it to 302.11. Okay. So let's say I was in my Wall Street days back in the day and I needed to let a trader on the desk know, here's the key supports for Google. This is kind of how I do it. And we should use those same tactics in our personal trading, right? Act like you're a professional. You are the analyst looking at the setup, handing it off to your other half, which is the trader in you, to take action, okay? All right, so with that, Google is at new highs. And if you can keep chucking on, then we have round figures to look at, 340, 350, with the most important support at the January 6th low. So next in the alphabetical lineup is Amazon, AMZN, in terms of the company name. All right, so same idea here. I had looked at how there was this downward move. We had traded above it, and look at how it became support, right? The price action here in the middle of December did not even come back to that trend line. We were able to get above the December 11th high. It was a bit of a volatile day, but shares are higher. So now we have a different situation in that we're not at all-time new highs versus Google. We have new resistance to identify. So I'm going to take this line that was broken and just recycle it, meaning instead of drawing a new one, I'm just going to move it to its next place. Here's how you do that, okay? Listen close. People are always asking me, how do you identify support and resistance? What's the best and easiest way? I'm literally showing you. Go to the furthest right of your screen, whatever you're trading, doesn't matter. Doesn't matter if the bar is not finished, just go to the furthest right. Go to what that current price is and put your cursor there, okay? Use your hands, people, okay? Now, take your cursor of your mouse and drag it back, like physically drag it back, and then see when you bump into something. Is that something significant? Well, in this case, it's this November 12th range. It's not that important in sense of it's not a key high. However, it's super close to this doji high from November 10th. So I'm going to take that resistance line and recycle it by placing up at November 10th, right? Now that this stock has gained upside action, that's the resistance to watch. What if it gets above there? Well, now I can go ahead and mark the next resistance, which is the November 4th high. So that's all you do. So it's the same thing for support. Let's try that, okay? Now, depending on what direction the market's acting in, you're going to have to flip it and reverse it. So what I just did for support, or what I just did for resistance rather, works on a rising market. It would work for support on a falling market. How do you identify support in a rising market? Well, still start to the right, but then literally just trace back, like you're reading right to left instead of left to right. And then bring your cursor, move your hands, people, okay, to the most significant recent price low. A price low has 3 components: a bar low, a lower low, and a higher low. That's it. That's all I want to monitor. So now I know that January 2nd low is an important support. Not necessarily the end of the world if we trade below there, but it is maintaining the structure after this consolidation. As you can see, I had already annotated the middle of the November 21st range. So now I'm going to formally label it 218.70. And I will add back a new pink line for that low. We can do the same thing along the way. We can find the midpoint of this January 2nd low that we identified and mark it as support. Now again, how close together or how far apart your support and resistance levels are also depends on your time frame. Okay, so I'm going to make a clone of this line and map it to the middle of that bar. 230.08. So here on TradeStation, I can open it up and just took the entry in. This is the same on like wealth charts on other platforms. And by the way, yes, I'll be back at wealth charts. So keep an eye on your email so you can join in. We're going to do something cool and different. We're going to have prizes and lots of cool things. So make sure you keep an eye on your email. I want to ask you to register for the Wealth 365 Summit. You join. Okay. Now coming back to this chart, I feel pretty confident with this. One more level of support that's important, I would say, is the actual old high from January 2nd because it was an outside bar. It had a higher high and a lower low than the previous candle. Now, what do you do when you have multiple supports? This is another question we get. You treat them based on their history significance. Okay. So the old high is less important than the middle, and the middle is less important than the actual traded low. As I'm looking here, I see another level we probably should identify. So that is the December 17th low. In doing that, I lost my midpoint annotation, no biggie. But again, that means that the low from just November 21st is important, okay? What this does, guys, is it kind of like relaxes your shoulders and gives you a plan if this stock turns around. I don't think it will in the short term. I think we're more likely in Amazon to head towards this 250 to 258 range, okay? But now I don't have to, in a hurry, figure out what to do if it turns down lower. That's why it's important to map things out. All right, that was very in-depth. I'll keep doing the same thing, but I'm not gonna explain the same things over and over. Let's go to meta now. I'll just do versus kind of teach here. All right, consolidated and now attempting to break below a support level that I had noted. However, the RSI power zones are basically near neutral. They're near that 50 level. So on Meta, I am not convinced yet of what's going to happen. I want to see a daily closing break beneath the December 15th low to start to get short-term bearish. Otherwise, if we get above January 6th, we're back off to the races. All right, next up is Microsoft. Wow, all my levels are still intact. So there was a whole lot of nothing on Microsoft. It's building a nice big sideways range. This is a time correction, right? It's eating up time on the time axis, not price on the price axis. Based on the way it looks now, though, look at how it's really staying beneath this old September 5th bottom. So if I had to bet, I would bet for a breakdown short term. Not necessarily dropping super far, but I just think that this is not behaving like a stock that's regrouping. It's behaving like a stock that's redistributing, okay? All right, next up is NVDA. And here we came up and broke above this December 8th high, but didn't get to the next level. Now it's starting to turn lower a bit, and the RSI power zones had returned to bear resistance. This is not looking great for NVIDIA right now. If you see the scrunch in my nose, that's a automatic body reflex, okay? Now, the other thing that alarms me slightly is that if you can see here, we have retraced 50% of the decline from October 29th to November 25th and not been able to sustain a close above it. Look how many times it touched it. 1, 2, 3, 4, 5. None of those days close above that level. If you are looking at NVIDIA, short-term weakness ahead. Now, how far down do I think we might go? To the old high from December 17th. But at the minimum, now you look at the 50% on the other side, and that's the short-term support. So 181.97, which isn't far off. So maybe in the next day or two we get there, and then we see what happens from there. Last but not least is Tesla. All right, so Tesla has had a nice little healthy correction over the holidays and pulled back. Its 50% has already been exceeded. It's 50% retracement. However, the RSI power zones are holding in bull support and looking good. They look like they want to pick back up. So if Tesla can get above the January 5th high, that'll be good news for a return to the December 22nd range. That looks to me like what's going to happen. No guarantees, that's just my hunch, okay? But if it doesn't, and we have to be prepared for an alternate scenario, we look at the supports that have formed down below. 382.78, 383.76. The first one's lower. Again, I'm trying to identify three parts here. The old high, meaning the high of the bar, the midpoint of that range, and the low, which is the most important support. So that's where I'm looking at Tesla, and I think, again, it has a better chance of moving up than down from there. So that was a longer dive into the MAG7 because I literally hadn't touched the charts in weeks, but I hope you can see that you too can come back to charts of something you haven't traded for a while. Maybe you're a stock trader and you trade based on scan results. Maybe you are just learning new markets and you want to be able to follow them even off a breakaway. So if you got value from this video, a refresher on support and resistance, a helpful analysis on the MAG7, go ahead and hit that like button and I'll catch you in the next video.